Welcome back to another episode of the Accounting Leads Now podcast. If you haven't already, make sure to subscribe and leave us a review. It means the world to us and ensures you'll never miss an upcoming episode. Now to our guest. This is a guest that I had the pleasure of meeting at Scaling New Heights just a few days ago. He's closed over 500 accounting firm acquisitions, not 50, 500. He sat across the table from more firm owners navigating the buy or sell decision than almost anyone alive. He knows what deals fall apart and why. He knows what buyers get wrong. He knows what sellers leave on the table. He's been in the commercial lending space for over 30 years with stops at Live Oak Bank and United Community Bank before landing where he is now. And he's built a specialty so specific that his LinkedIn URL literally says accounting tax leader. His philosophy, education first, sales second, that alone tells you what kind of conversation this is going to be. He's the Senior Vice President of SBA Lending at United Midwest Savings Bank and the go-to name when accounting firm owners are thinking about buying, selling, or financing their next move. Please welcome to the show, Shannon Hay.
James, thank you so much
for coming on the show, man.
I feel like an MMA fighter coming out for the count there, man. That was one of the best intros I've ever heard. Thank you so much. I'm so humbled by it. I appreciate it.
You are very welcome. I'm just picturing the mic dropping down to the middle of the stage, grabbing onto it.
Yes.
So, Shannon, I want to get right into it here. You've done over 500 accounting firm acquisitions. That is not a small number by any stretch. Most people in this audience are thinking about growing their firm, not necessarily buying one. Make the case. Why should a firm owner who's never thought about acquisition be thinking about it right now?
Oh, gosh, this makes me proud to be an American and coming close to the 250th anniversary of America. I think that we should lean heavily into the patriotism and the benefit that our government gives us as entrepreneurs. The program that I've used to do over 500 deals is the SBA 7A program. And it's a government guaranteed lending program. It allows for entrepreneurs to enter into a market that they might not be able to enter into otherwise. It gives banks the ability to lend in situations where they might not lend otherwise. Thinking about like goodwill transactions, right? What they call maybe blue skies or air balls. Banks are much more willing to do those types of deals because of the government guaranteed lending backing of the SBA 7A program.
I'm curious, Shannon, there's a lot of detail and complexity that goes into what you do.
There is.
When you were growing up, young Shannon, running around as a kid, is this what you ever imagined yourself doing for making money and having a career?
No. So, don't steal my security questions for my multi-login. It's always asked the question, what did you want to be as a kid when you grew up? Some of those like, what's your mother's maiden name kind of thing. Mine was an astronaut. I always thought I wanted to be an astronaut, but as you get older, really close. Really close. No, it's I kind of slid into this through being exposed to professional services lending, right? So banks have had a hunger for a number of decades now to really get into professional services deeper. I was with Bank of America for almost 15 years. They do a lot of dental, veterinary, and medical, and they wanted to launch into what they saw was insurance law and accounting. I don't think they really knew at the time, but accounting really has this niche about it. Not only is it independently owned and operated, but there's this rich broker network of folks that represent or intermediate these deals nationwide. Most people don't know this. There's like probably 75 accounting brokers nationwide individually. And then those are collectively probably 35 groups of actual, intermediary firms or broker firms that specialize in accounting deals. And so finding that richness within trying to launch that conventional program at B of A, it wasn't B of A's fault. I would say it was more conventional lending's fault is the loan to value ratios weren't really meeting the market demands. More sellers wanted more cash up front. Conventional really wants more seller note, less cash up front. And so SBA was always beating us up when we were trying to launch that program. And that's when I got introduced to SBA lending and then got an invitation to do SBA specific lending to accountants and knew that the two niches together. There wasn't really an SBA lender that was wholly focused on just that industry. Grew up in that dental industry, seeing the change that occurred there and how banks got, I think you'll see more conventional money in the accounting world as this continues to progress. But right now, SBA is the best product in all 50 states. It goes up to 100% of evaluation amount. It's a 10-year term. Rates are really decent, high 8s, low 9s, no prepayment, and working capital is included in every deal. So it's like that, all those parameters make it really easy for a buyer to make a good educated decision with the right capital behind it. And then, of course, repetition, right? Knowing somebody like us that's done a lot of deals, we can guide you through pitfalls or things that may other SBA lenders or local banks might not, just because they don't see a lot of accounting deals, might not know they're
Yeah.
specific to the industry.
Interesting. Very cool.
Thanks.
So you've seen 500 of these deals close. You've probably seen a few blow up too. What's the most common reason a deal falls apart before the finish line?
Well, I always say 6 to 10 rule. Like, it's like we feel like we look at 10 to do 6. So that's kind of been a little bit of my mantra in what we do every day. Just remember that it's the 6 to 10 rule. There's so many variables. If I could give one high level education to someone really entering into the acquisition market for the very first time, is that letter of intent is the critical document. That is your first line of communication with a seller, showing the broker your intent, right? The person that wants to tell the seller to take your deal. And that I think a clear, concise, communicative letter of intent. In other words, if you have things you want done or want to do, don't bring them up after you've already offered something else. So be as sincere and direct and as open with your offer as you can. By way of example, if you want a long-term seller transition period, you need that, or you think you need that, then ask for that up front or talk about that up front. If you want some sort of revenue guarantees in your deal, ask for that up front. Don't try to negotiate that after the fact. Purchase price shifts a little bit and can based on due diligence. Always, right? Evaluation. I mean, I think there's probably more flexibility in the purchase price itself than there is in actually the terms of the deal, which is where the nooks and crannies of the deal lie.
Would you say that's where buyers get things wrong the most often? Then they're kind of going back and trying to add in outside the letter of intent, or is there something else that you'd say, number one, this is what people get wrong most of the time?
Yeah. So it's a crazy competitive market right now. And it's still, ever since I, started in this industry a decade ago, it's always been a seller's market, right? Unlike the housing industry that you see come and go one year it's a buyer's market, next week. The accounting industry has always been beneficial to the seller. In terms have only gotten better for the seller. Purchase price valuations have only gotten better for the seller. And even though that there's less CPAs coming into the industry than there are exiting it. And so you think that there would be this silver tsunami kind of ebb and flow of like there's too much inventory. Problem is you have private equity gobbling up those larger opportunities, right? And then the lower market, you have non-accountants now buying accounting firms, trying to merge them together to create firms that are appealing to the PE market, right? There's a lot of mass consolidation going on. And so it's still competitive, right? So a lot of times buyers may operate in their own bubble of what they think how an accounting deal should look when they're competing against a market that's shifted quickly beyond the way they did it 5 years ago isn't the way they do it today. I mean, the way deals are being transacted, they're just changing rapidly because of the high demand for these firms and their data.
That makes sense. So someone in our audience owns a firm. They're starting to think about an exit in the next 3 to 5 years. What action steps do they need to be taking today to make their firm more attractive so they get the number they want 3 to 5 years down the line?
Yeah, that's an easy question to answer because we're dealing with the tax mitigation strategists of the world here, right? You are the expert at avoiding paying the IRS money. And I don't want to say that like we're being sneaky, right? But we know how
you're playing the game. You're abiding by the tax code, so it only makes sense.
That's correct. Yeah, you're minimizing your net income, reported so that you pay less tax, right? So, and you probably have done that in owning your firm for however long you have. However, when you're getting ready to come to market, that number matters, right? I would always say margin matters, and so margin drives value to the buyer, to the bank. It's giving the money to do it. We approve our deals based on historical debt service coverage, right? And so we're looking back 3 years and we're going to look at that bottom line income or officer compensation or distributions, right? And what we call seller discretionary earnings to get to a net operating margin that can service our debt, but also give the buyer a good return on investment for what they're buying. If we have to like dig out those things, like what we call add backs, and we're really getting overly creative with them, it starts to look we're trying to unpack your mitigation too much. So I hate to say it, but it's like if in the next 3 to 5 years you're going to be selling, start paying some taxes, start dropping some income to the bottom line, whether that's through compensation or whether that's through or drive it really heavily to owner pension, right? If you really want to hide it, put it somewhere that's mitigating tax. So that way we can easily say that's officer compensation, and we can add that back and use that debt service to support your purchase price and payment. So it's like more margin just drives a higher value, right? So seller discretionary earnings multiples, EBITDA multiples, right? Those are all based on tax returns.
Interesting. Yeah, that's similar in a sense, like being here in Canada, not as far as selling, but even going out and getting loans. Like the goal is always try to make the business look like it's not profiting a ton. So you're not paying as much in taxes. But then I know when I've wanted to go to the bank to get loans to buy a home or to get whatever, it's like, well, if the business isn't making money, at a certain point in the road, you need to also put income into the business to pay to get ahead. It's a bit of a dance that,
It is a dance. It is a dance. I always say banks love to give you money when you have it.
yeah.
So no one's banging down your door when you're broke to give you money, but
Yeah, very
the
good
credit card
point.
offers come in the mail the moment the FICO score goes over a certain number, right?
Yeah. So your philosophy is education first, sales second. I love
Yeah.
that. I want to hear a little bit more about that. That's a real departure from how most leaders operate. Where
Yeah.
did that come from and how has it actually changed the outcome for your clients and even for
Yeah.
yourself, really?
Well, I think it really starts at a personal level, right? Is that I believe that none of this really belongs to me in the first place. I'm just here to kind of manage it. And I'm fortunate enough to get the opportunity to be in the middle of that in some way. That is the joy of life, right? Is sharing and helping. And I try to take a posture of surrender. So it's like surrender the information and then good will come back to you, right? It's like I started with, I want everyone to know that it's like if you have an existing business, right, you can leverage this SBA program to buy another business and it doesn't cost, it's no money down, right? I mean, that's like, if I could hear anybody could hear me today, and whether it's for your own accounting firm, buying another accounting firm, the side hustle, the small book of business, there's value in that, and we can leverage that as equity. But think about it in your clients' regards, right? The small business laundromat that wants to buy the next laundromat down the road, they can do the same thing with the same program. A lot of people think I need 10% down. Well, not if you have an existing business, right? That is equity. And as long as you're buying a like-minded business, the SBA is here to support you up to $5 million. I mean, that can build wealth for so many people. And I think it's such an untapped benefit of the SBA program that I just want to share that. That's really where, and I feel like saying that over and over again, eventually people will come back to us and say, hey, you said you could do this. Can you do it? And hopefully that results in sales. If it doesn't, at least I taught someone that existed, right?
It sounds like there's just a really an open and abundance mindset to that. I'm a big fan of Alex Hormozy, and he always talks about like give away everything for free because it's
Yeah.
only going to show someone, well, what is their paid stuff if this is all the free stuff?
Well, right, exactly. He also has the belief that he doesn't want to leave anything to his children. He just wants to, it's like a race to see how much he can give away upon his deathbed. I always say that you can't receive if you're like this. But if you're like this, you're open handed. You can give and receive, right?
Yeah, it's
So you're
so
trying
good.
to hold on to everything. You're also fighting, right? It has the same position as fighting, holding on to it. So
As we help firms drive inbound calls, pick up more leads, be visible, a lot of firm owners are like, well, I don't want to give away information all the time, or I hate when people call and looking for free advice. What do you say to that firm owner where the narrative right now is educate first, sell second? Because I think there's also a bit of a dance as well with that, but at the same time, like give out the information. Like, is someone going to
don't,
go and implement it?
yeah.
Probably not. It's all on YouTube anyways. They're
Right.
going to
Well, don't
come.
get me wrong. Like, I get frustrated sometimes when I get in the weeds with people on counseling, right? I have a particular customer now that's like, I get a half hour a week with them. And it's like, we get to the end of that 30 minutes. I'm like, man, how do we burn through all that time? And we're not even near a deal yet. Like, there's not even he hasn't made the official offer. It's just all the education going up to it. So, yes, I do waste time. I do probably give away time that is so valuable, but you never know, right? You never know what seed you plant is going to grow into that behemoth live oak, right?
Mhm.
That's going to be here for hundreds of years beyond you. And, I always joke about this silly little tax show I went to in Virginia once. And it was like, it's like, man, that was the biggest waste of time. But there was like one or two good conversations where I like planted those seeds. And I said, I'll never go back to that trade show again. That was just a waste of my time. 3 years later, a guy calls me and goes, hey, I talked to you at the Don Farmer tax retreat in Richmond, Virginia. And you told me if I gave my partner 10%, that in 2 or 3 years, he could buy me out, no money down. I'm calling you now. He's had 10% for 2 years. Can you do a $3 million loan tomorrow? And I'm like, again,
Amazing.
just, yeah, it's just did I see the fruits of that labor immediately? Was I frustrated in the moment? All the answer is yes to all that, but, it boomeranged around.
Well, and that's such a great just reminder that good things come to those who wait, as cheesy or as corny as that sounds. I was even thinking of some just like the snowball effect or the butterfly effect from the first, say, conference I went to, and then the next one, and then just like all the introductions that were made because of going, and the domino effect. And now
Yes,
some of the things that are happening to me in my business, I'm like, I don't know if that would have happened if I didn't go here and to that one before and I didn't speak to that person. And like, sure, you could do that with anything, but I don't know if you have that open mind and if you keep doing the thing and you trust the process, the
that's right.
outcome will be there. So I
And we're
love
talking
that.
about, and what's great, James, we're talking about our industry specifically, right? You're talking about
Yeah.
engaging in the accounting industry. I'm talking about engaging in the accounting industry, but also the banking world, right? And so when you think about locally in an accounting firm, how much greater that reward could be. Mine's on a national level, right? So I'll do a loan in California and a loan in Florida, but I never really see those offices. I
Yep.
never see the shingles go up or the shingles change or I'm not the chamber meeting when they're cutting the ribbon for the new owner. God, I would love to be. But as a firm owner in your community with the capacity to touch people on that level through that type of giving, it's when I talk about the loan program and talk about teaching your small business owners about this benefit, it's like I say, look, growing clients equal growing firms, right? So if my small businesses that I'm advising or giving information to, and I'm not really helping them use that information to further their growth, I'm stifled with them, right? But my clients are all growing because of all the great advisory service I've given them. Guess what's growing right along with it? My firm. Yeah. All ships rise with the tide.
Yeah, I love it. I'm so pumped to hear that story of the individual came back to you and was like, "Hey, I remember years ago," and like you get
I
that's
wish you could
awesome.
be in my
So
head though and
cool.
hear the frustration that I went through
Oh
and
yeah,
that
I
4 hour
believe
drive
it.
back from Richmond and all the things, right? It's just I was like, I'll never do that again. But it's funny. I still haven't been back to that show. I probably need to just to eat a little crow is like go sponsor a Don Farmer tax retreat.
There you go. There you go.
Yeah, yeah.
So we talk a lot on this show about building predictable revenue and marketing systems. How does strong, consistent revenue affect a firm's valuation and its chances of getting financed? Does having a real client acquisition system move the needle on what a buyer can borrow?
Everybody asks about getting pre-qualified as a buyer, right? How do I get pre-qualified as a buyer? How do I know how much firm I can buy? For a buyer, it comes down to experience, right? Capacity, capability, their background and credit, right? So good personal credit, decent, but no financial crimes, right? And then lastly, personal liquidity, right? Or equity. So equity would be equal to value in existing business or cash on hand. But the 70% of the equation is the seller side of the business, the subject business that you're buying. And it's historical debt service coverage ratio, right? So we're driving deep into that. That's where we hang our hat as SBA lenders is we look at the last 3 years tax returns because our real main form of due diligence is pulling transcripts on that business. Because again, we're on all 50 states. So we're not really doing the due diligence that we hope that a buyer is doing and encourage a buyer to do. Really, as a seller, you really need to focus. That's why we talk about those last 3 years. There's room or nuance there, right? So really the standard operating procedure says has to debt service in the prior year at whatever ratio the bank determines. And then it has to be at least a break even in the 2 years prior. But when you're talking about, I always say capital market drives value. So $1 million on a 10-year term at 9%, it's going to cost you, I'm going to round up to 13,000 a month, 155,000 a year, right? You need at least that on that $1 million to service the debt, right? And then we multiply that times 1.3. So that's how we get our debt service coverage ratio.
Mhm.
But that's before the buyer is taken into consideration. So like a buyer's coming from Deloitte or E&Y and he's used to making 300K a year. That's a much harder person to lift up than an existing firm owner that's already supporting themselves already off their existing firm, right?
Okay.
So an existing firm owner has a much greater capacity to pay a much higher multiple than a guy coming from private or public accounting for the first
Okay.
time and buying for the first time. But there's everything in between, right? So, and we love them all.
How do you guys grow? How do you guys find new deals? How are you getting involved? How are you filling your pipeline?
The last few years been so fortunate that we get dizzy during this time of year is that we have quite a, we do more SBA loans for accounting acquisitions than any other SBA lender out there. But that's because of our rich network of brokers that make referrals. We also advertise heavily on what's called the Accounting Practice Exchange, which is like a Craigslist of accounting firms for sale. Going with the teaching first mantra, my new hope and goal and dream is that with automation and the ability to move faster as a banker, that I will at some point be able to utilize these CPA relationships, accounting, enrolled agent, bookkeeping relationships that we've made and turn back to them and say, now let us serve your small business clients, right? How can we do for them what we did for you? And this teaching kind of has a full circle effect. And so we hope to, be able to find loans for accountants and the clients they serve.
So,
Thanks.
Shannon, as we wrap up this episode, what is the number one actionable piece of advice you would tell the listener when this episode finishes before they jump to the Joe Rogan podcast or they go to Hermosi or they turn on something else? What should they go and implement right away that will either benefit themselves or benefit their business?
Never stop learning, right? I say never stop teaching, right? I'd say never stop learning. And I think in this technologically advancing world, right, where we're moving so quickly, the learning opportunity is greater than ever. And listen to the people like the Jameses of the world. I have a laundry list of influencers that I follow, mentors that I lean into, not only inside the accounting world, which I highly recommend. There's a ton of great influencers and just great people sharing is carrying information out there that how to better manage your firm, how to get better margins, how to go from billable hour to recurring revenue. That all exists out there. But then when it comes to buying a firm or growing through acquisition, people like myself, people like Sarah Sharp, I just throw a name out there, are out there in the industry deeply talking about this movement, this mass consolidation. It's the solution to the accounting industry. There's not enough accountants. And so someone has to wrap them all together. If you're an accountant, I'd recommend being the person that does that. I think that's your moat against technology, is possessing the data. But then never stop learning, man. Always get better every day, I like to say.
Love it. Awesome. Shannon, how can people get in touch with you, continue the conversation?
Love it. Yeah, I'm on LinkedIn, of course, Shannon Hay. And then I'm on Twitter at Shay SBA. Or X, I guess. You can never get over called or Twitter. And then my email is Shay at umwsb.com. And then people call me crazy, but I give my cell phone number out on every podcast I do. And that's 614-648-9199. You can text or call anytime.
I love it. And we had a guest recently do this as well. I don't think right now recording that episode is out yet, and I can't remember who it was off the top of my head, but I do want to touch on this before we wrap up because so many business owners make it so hard to get in touch, like have their prospects get in touch with them.
Yes.
The goal in business is to sell the thing you're good at and passionate about. So make it so easy to do that. So I love that you just not only gave out your email, but you also gave out your number.
Yeah.
So people can get in touch with you.
If
and
you
I hope someone reaches out and a deal comes from that. That is amazing.
Well, that's the seed though, James, right? I plant the building. I gave them the soil. They give me the seed to plant, right? Whatever that is. It might just be a question of, I'm thinking about buying in 10 years. What would you do? Save money, or build a small book of business on your own. But that seed I get to plant, right? And it's the Don Farnham rule, right? It's going to come back to me in 3 years. I'm going to think it was a waste of time. It's going to, the universe is going to make me regret that, but make me be grateful for doing it.
I love it. Yeah. Shannon, thank you so much for stopping by. It was awesome meeting you at Scaling. I'm pumped to see you next month at Bridging the Gap. It'll be good to see you again.
Yes,
everyone,
we'll get a picture next time.
Absolutely.
All right. Thanks, James.
That's a wrap on another episode of the Accounting Leads Now podcast. If you got something out of today's conversation, do me a favor. Hit subscribe so you never miss an episode and leave us a review wherever you're listening. It genuinely helps this show grow. And the bigger this community gets, the better the conversations we can bring you. Now, here's the part I actually care about most. If you're running a firm and you're still relying on word of mouth to bring in new clients, I want you to hear this. Referrals aren't a growth strategy. I'll say that again. Referrals are not a growth strategy. They're a hope strategy. If you're ready to stop hoping and start building a system that brings qualified prospects to you consistently, go to accountingleadsnow.com and book a call with my team. We work exclusively with accounting, bookkeeping, and tax firms. We'll look at your situation specifically and tell you what we would do if it was our firm on the line for bringing in new clients. And if you want to go deeper on your own first, I wrote a book called Booked Solid: Digital Marketing Strategies That Actually Work for Accounting Firms. It's the digital marketing playbook built specifically for accounting, bookkeeping, and tax firms. Link to grab a copy is in the show notes. Thanks again for listening, and we'll catch you on the next one.